My name is Ranjan Bhattacharya. I've been investing and developing property for the last 30 years. I specialise in mixed use and commercial buildings, bringing defunct buildings back into life, and also doing simple, quick in and out, buy, refurbish and sell on type of projects. In terms of applicants, of course I'm looking for the numbers to stack up. The numbers of the deal have got to be sexy. But what I'm also looking for is likeable entrepreneurs. Likeable entrepreneurs with passion for their game, with fire in their belly, who know their due diligence, who know their numbers, and who have a track record of success. Good evening, everyone, and welcome to this live stream extravaganza for July. Our theme for this evening is really about how you can find bargain property deals in these challenging times. And challenging times they certainly are. My name is Ranjan Bhattacharya. We got 3 guests for you tonight to explore this theme. And over the next hour or so, we'll be having lots of lively property chat on the state of the current market and the best opportunities going forward over the next couple of years. And also we'll be taking some of your questions from the floor. So just let me know. I mean, we've got several people coming on. We've got a couple of hundred or so now online. I mean, I just want to know, just let me know in the comments where you're all listening to this live stream from. I'm fascinated to see how far afield some of you are. Sometimes we have some international folks on the live stream all wanting to know what's going on. So do let me know where you're listening or watching this from. If you're watching this on replay, in the description below, the relevant sections and questions are all going to be time coded so you can navigate that way through the replay. For those new to this live stream, we have come online basically because we normally do a face-to-face property meet in central London. We run the largest networking meet in the country. We get 300 people turn up at our live events. And obviously, since COVID-19 has imposed all sorts of restrictions on us, it's a little bit difficult for us to do those live meets. So we have come online. Normally, our physical meets take place on the last Wednesday of each month, so that's why we are doing the live stream on the last Wednesday of each month. So our event's all about networking and sharing knowledge. I normally bring on some great experts to share their knowledge and tips on what they're doing in the current property market. So we all try to keep it real, we all try to keep it current and relevant in terms of giving you some tips and advice of what you can do to press ahead in property. So we've got over nearly 240 people online. We've got people from as far afield as Croydon, that's very great. Devon as well, Hector from Devon. We got Tim from the South Lakes in Cumbria. No one from abroad today. We used to have, oh, we got Phuket. We got Maverick from Phuket. That's very nice to see. We've got Woking, Swindon, Faverham, Nottingham, all sorts of people, all sorts of folks. I mean, that's the beauty of doing this thing online, because we also get people join in from much further afield. I hope you guys like the new set. We've changed the YouTube set around. Just let me know what you think in the comments below as well. So, make sure if you're new here and you haven't come here before, just subscribe and hit that bell icon, because we just put out new content each and every week. We've got more than 250 videos on the YouTube channel right now, and it's all dedicated to helping you be more successful in property. It's been a very interesting month since our last live stream. We've got the sweeping changes to SDLT. Now for property investors, of course, anything under £500,000, you just pay the 3% surcharge, which actually is not bad indeed. So if you're buying a property near to the upper end of, or just below £500,000, you'd be paying about £15,000 in stamp duty. A lot of people think that's still too much, but the way I look at it is this takes us back to what stamp duty was in 2001. So there are plenty of great opportunities that are opening up for investors with those stamp duty changes. They say it's going to last till March, but who knows? The other big news is, of course, the new permitted development rights. This is going to be a wholesale change to the planning system. It takes us back to the 1950s, where there was a lot of freedom to do a lot of stuff. It's rolled back a lot of really the silly bureaucratic stuff that used to exist in planning. So they've changed the commercial property usage classes. They're allowing you to do a lot more with existing buildings, both residential and commercial. And particularly with commercial property, the government recognizes there's a massive oversupply of both offices and retail properties. And those are going, and meanwhile, there's a massive shortage of housing. So it makes sense to make it easier for developers to repurpose those. So those are going to represent some massive opportunities. And of course, there is the property market itself. I mean, the government is, I mean, obviously with shutdown, the economy has taken fallen off a cliff, if you like, but the government have tried to support it with all sorts of measures. And I liken it to a little bit like giving the economy several cans of Red Bull. We're all on a little bit of a high, but once that high comes off, who knows what's next. But these are all topics that we're going to be discussing with our panel of experts who all have slightly different specialisms, if you like, in property. And we're going to be exploring how they see the market, the challenges ahead, and how they will be, and what they will be looking at in terms of bargain properties and how they'll be going about sourcing them. So who do I have on the panel tonight? I've got Hanif Khan. Hanif, I've known for more than a decade. He's a very interesting serial business entrepreneur. He runs a lot of businesses outside property, a lot of cash flow generating businesses outside of property, but all the time he's looking to invest those profits, if you like, into real estate. He runs some letting agencies, and he's been sourcing properties direct from vendors for many years. And he's done a lot of, I mean, he's been sourcing properties at the rate of 40 to 50 a month in his sort of heyday. He was also sourcing properties direct from vendors back in the last credit crunch and recessionary period. So I'll be talking to him about his views on business and his views on property and his tips for sourcing properties below market value. I've also got on the panel Piotr Rusinek. Piotr Rusinek knows a lot about auctions. He helps a lot of clients of his sell properties at property auction. And so from that, he's got a unique perspective, if you like, of what's happening in the auction market. Now, I always say that the property auctions represent a fantastic barometer of what's happening in the wider property market. And I'm going to be asking him to share his perspectives on what's happening in the auction room, because whatever happens in the auction, the mood in the auction room represents the mood in the general property market pretty much 6 weeks later. And I'll be asking him about his, if you like, viewpoint, his analysis of what's happening in the auction room, and his tips for what are going to be making some great property deals going forward. I'm also joined by Jay Howard. Jay Howard used to work for a property auctioneer. He now specializes in his own investments and also helping others buy and sell properties at auction. He knows a lot about underwriting, which is a very specialist strategy, which I'll be quizzing him on and trying to glean some tips on how people can use the underwriting strategy. If you've got any questions, we'll do our best to answer them. We get a lot of questions sort of whizzing our way here. I can see we've got more than 300 people on the line. Now, do use the chat on YouTube to chat amongst each other and banter with each other and whatever it is. If you want to get a question to us, if you want to guarantee, I mean, we will try to get through questions as and when they're appropriate, and I'll put them to our panelists. But if you want to guarantee you get your question answered, then the way to do that is to use the super chat. You'll see a little dollar icon. Is it a dollar icon on YouTube? Right by the chat box. Put your super chat in, and basically your question will get straight. Is that? Oh, someone's asking me about vodka. I'm not going to get distracted by some of these silly questions here tonight. Okay, so yes, if you want to guarantee your question gets through to our panel, just use the super chat. So we got 333 people on the line right now. So let's, without much further ado, go to my first panelist, who is Hanif. Let me just unmute you, Hanif. Oops. Have you unmuted yourself, Hanif? Hi. Can you hear me okay?
Yeah, I can hear you now. Can
you
hear me?
Brilliant. Well, good evening, Hanif, from the Midlands, yeah?
Yeah, from Birmingham. How are you guys?
In Birmingham, not Birmingham, Alabama.
No.
But Birmingham, UK. So I introduced you as a little bit of a serial businessman. Before we talk about your sort of property stuff, would you like to kind of give people for people who don't know you, a bit of a background to yourself and some of the other businesses you do outside of property?
Yeah, sure. So my background was at IT. I started in IT, worked designing air traffic control systems. Then I got into property, set up some estate agents, letting agents, etc., and started building my own portfolios, buying, doing the direct to vendor type of stuff that you talked about. And then since then, we've done a few different businesses. So we have a hardware business. So we distribute hardware products to people like B&Q, Screwfix, Travis Perkins. So the plasterboard that you see in B&Q comes from us. All the different types of plasters, millions of plastic buckets, lots of different products we sell to those kind of guys. We also have a beauty business where we sell beauty products to Boots, Next, House of Fraser, Harrods, all those kind of people. Those are like cool brands from around the world. We get exclusive distribution rights, and then we sell.
Well, a lot of people plaster on makeup, so I guess there are some synergies.
That was the discussion me and my wife had when she decided to go into that. I said, "I'll plaster walls, you plaster faces." So we do that, and then we also have we have some portfolios that we're building, and the main one, I guess, at the minute is supported living. So we have a supported living business, probably has about 80 odd people working for us in that. And we're looking to grow the number of properties we own. So we try and buy the properties, we invest in them. We use the cash flow out of the supported living business to buy the properties so that we own them long term. And it's a great investment strategy that we've used recently. And then I've worked with a few VCs, so venture capital funds, where I help them in terms of their decisions as to which businesses to invest in. And we also invest in some startups and scale-ups.
Okay. So a mixed bag of activity, but you've done quite a lot of direct to vendor stuff in your time, particularly during the last recession. Talk us a
Yeah,
little bit through some of that.
yeah. I mean, we used to run a lot of direct to vendor. So typically between 30 and 50 a month of properties direct to vendor. We'd buy them. We either flip them on or add them to our portfolio, depending on the property and where it was and how it fitted with our overall strategy. We ran that at that sort of level for about 2 years. And we still deal direct to vendor with lots of properties. Even now, we have an agency, so we still own an estate agency and letting agencies that manage our own portfolios, and that we use to source direct to vendor deals. I still negotiate deals with vendors if if it's a commercial deal or something more complex. But if it's some of the usual stuff, we've got trained staff who handle the inquiries, and they're able to negotiate and do the deal either as a lease option or a purchase lease option, or straight cash, depending on the deal itself.
Okay. So what are your what's the secret of running a successful direct to vendor campaign?
Okay. The thing you have to understand is you've got to create a win-win situation. I know everybody always says that, create win-win. But really what you've got to understand is, and the way we always look at it and the way I train my staff is, create the win for the seller first. Don't worry about your own win. Think about how they can win. Once you've figured that out, then figure out how you can win from that same deal. Because otherwise, if you're thinking about yourself, you're not giving them the best deal. Give them what they want, understand what they want, and then figure out how you can make money. And if you can't, you move on to the next deal. But usually there is a way of structuring the deal to make you get a win, but giving them what they want. And I'd say that's probably the biggest secret.
I've got a quick interruption because we've got our first super chat of the evening. And when you do a super chat, you guarantee your question gets put to the panel. This is from Deepak Rajgor. It's for you, Hanif. What is the average response rate from door-to-door leaflets? Can you share any sort of actual results?
Yeah. So we leaflets work. So one of the things I'd say to you is different strategies work well at different times. So 15 years, 12 years ago, when we were doing a lot, leaflets were amazing and they were doing great. Then everybody started doing leaflets and they tailed off. Now they're sort of getting back up because not many people are dropping leaflets to say they want to buy houses. So the response rates change a lot. But from a conversion rate, every 10,000 or so leaflets, expect to get 1 or 2 deals is what we, actual deals happen. But that will depend a lot on where you're doing it, who else is sending leaflets at the same time, and your ability to convert. But you'll get the deals coming through for sure.
Yes. And I think that's an important distinction, because I think the response rate is very much to do with how many inquiries you get, isn't it?
Yeah.
And then the conversion is a different aspect, really.
Yeah. So let me give you an example. I've seen people, and they'd send a leaflet out, and I'd say, "I'll pay you 150% of the value of your property." You're going to get a lot of response, but you're not going to get many deals out of that, because you're not going to be able to pay them 50% more than their properties were. So, a lot depends on how you structure it and whether you're filtering the right kind of people into what you want. But overall, for every 10,000, you would expect to do at least 1 or 2 deals.
And if I can just throw in my tip of the evening for leafleting, which is, if you're doing 10,000 leaflets and you want a decent response rate, distribute them into 10,000 different mailboxes. That's my addition.
If you've got time, I'll tell you a funny story about our leaflet guys.
Sometimes you employ a leaflet distributor, and they do that.
So what we did, well, let me tell you. So years ago, when the first tracking devices became available on mobile phones,
Yeah.
we gave our leaflet guys mobile phones and said, we're going to, ring you to know where you are. So we'd employ our own teams of leaflet distributors going out. So the one time this guy came, took the job, and we're looking at the GPS, we logged into the site, and you could see he's sitting in the pub. So I said, all right, let's ring him. So we rang him and he said, how you doing? He goes, oh, I'm all right. I'm just on this road. I've been thinking it all day. I go, oh, you're working really hard. He goes, yeah. I go, you sure you're not in the pub? And he's like, what? What pub? And I go, you're in the pub. And he goes, what? Where are you? I go, I'm sitting in the corner. So this guy's running around this pub trying to find me because he didn't realize that we had the GPS tracking on the phones that we'd given out to him. So what you find is a lot of people with leaflets say they don't work. And the reason for that is the leaflet distributors are dumping them in the park. They're dumping them in the dustbin. You need to check and make sure that they are. So yes. what we tended to do is, if we didn't get a response rate, we know that they haven't delivered the leaflets. It's as simple as that. If you're not getting callbacks, it's because they haven't delivered them. And it's quite easy to check. So every now and then we would send someone who would go on the road that they're supposed to be given, because we've given them the route, and they'd see if there's any leaflets in the doorway. And if there isn't, they're not delivering. But really, there is, if you're not getting the responses, it's not because the leaflets don't work, it's because they're not delivering those leaflets. You can pay Royal Mail, and it's a lot more expensive, but you can get Royal Mail to do it if you want to guarantee that, or put some checks in place.
Yes, you got to put some checks in place. Okay, before I move on to our next, I forgot to mention, actually, Claire Norwood does send her apologies. She's feeling a bit poorly. That's why I have drafted in Claire Norwood lookalike Piotr Rusinek in at short notice to fill her shoes, which he has agreed to do. So we have another super chat, our second super chat of the evening. Yogesh Patel has asked a question, which is direct to vendor marketing. Which method at the moment converts the most? So I guess he's talking about, perhaps there's Google AdWords, there's leafleting, there's newspaper advertising.
So we've tried everything over the years, and people always ask me which is the best one, and I'll say all of them work. It's really about you and what works best for you. What's easiest for you to convert and get them to actually do the deal. Right now, landlord letters are working pretty well. If you send out landlord letters, you will get responses. It's a very easy strategy to follow. You don't have to do a lot. You can pay a company who will send the letters out on your behalf, and you just have to be able to answer the phone. So they work well for sure. But leaflets still work well. And if you're starting out, those are the two strategies I would suggest to people.
Okay, listen, we'll come back to you, Hanif, when we'll have a little bit of group discussion once I've had just introduced you, if you like, to some of the panelists. The next up is good old Jay. Jay, how are you doing, sir? Can you hear me loud and clear?
I can hear you, Ranjan. How are you?
Yes, very, very good. Enjoying your lockdown?
It's been absolute bliss.
So for the folks that don't know you, which is probably not many of you, because you've featured on our channel quite a bit here and there, and we've done quite a bit together over the years. But tell the viewers a little bit about sort of who Jay is and what you do in property.
Perfect. Yeah, I've been in property for 18 years. I started out in a professional capacity as an estate agent, then went from estate agent to investment agent, worked for a developer, then worked for an off-market asset management company dealing with about 20-odd billion pounds worth of worldwide assets. And then for the last 6 years, I was auction manager at a central London auction company. I've been trading property for 12 years, and I've been investing all 18, and that is across residential and commercial property. I've done some very, very small, nothing in comparison to Hanif, direct to vendor and some deal packaging in my earlier years. But primarily, I focus on auctions and or aged stock at commercial estate agents.
Okay. Now, one thing I wanted to ask you about, because as you mentioned in your intro. You work for an auction company, and one very interesting strategy, which not a lot of people fully understand, is this whole thing about underwriting. Now, I know you've done underwriting from the auctioneer's perspective, if you like, so you know that inside out. Can you just sort of explain to folks what underwriting means and how it can be used by an investor?
Okay, so underwriting is a promissory agreement. So it's a conditional exchange document which is arranged before the auction on a specific property. What it enables you to do is, in agreement with the vendor, of course, is for you to promise to buy their property at a fixed price. Now, most of the time, if you promise to buy that property at a fixed price, you're going to win it at that fixed price. But there is a chance that it will sell for more in the auction. So the property will continue through to the auction. If it continues through to the auction, you, as the underwriter, will split the difference between the underwritten price and the eventual sales price, either 50-50 or 45-45-10, whatever way the auctioneer works it. So what you're doing as an investor is you are acting as a guaranteed buyer for that vendor. As an underwriter, yeah. So, you would have heard of underwriting, you've got a deal going through and you've got a broker looking at it, and the banker have sent it through to their underwriting team, or your car insurance is underwritten by UK and national insurance. Everything is underwritten. So underwriting at auction is a really good opportunity to secure an asset, or if you're not securing the asset, you're securing an uplift. And that's the beauty of it, really. It creates a win-win. It solves a problem, or it solves a fear, and it puts you in a position ahead of everybody else.
Would you agree that, or would you say that if you're looking at buying any property at auction, you should have a stab at trying to underwrite it, approach the auctioneer and underwrite it?
Yes, absolutely. I mean, there's no harm in always positioning the underwriter as an opportunity or an option. There are some circumstances where it's just not worth it. If it's by order of the LPA receivers, if it's being sold by mortgagees in or not in possession, most probates sales won't look at it. Most housing associations won't look at it. Most local authorities won't look at it. So all of the corporate kind of spectrum, they kind of stay away from it, because what they have is they have stakeholders, shareholders, and other obligations where it almost they cannot have a conditional sale alongside an unconditional sale and a profit split. It just doesn't work for them.
Yes.
But for a trader to a trader, it can work, and for end user to property professional, it can work that way as well.
Okay, and if you guys want a bit more of an insight into underwriting from Jay, I'll put a link in the description on our YouTube channel. Jay actually spoke about underwriting at a Baker Street event, and that video is available on our channel. I'll put it in the description, or you can dig it out later on as well. Just a couple of comments. I'm highly offended by Richard Woodstock, who is saying, "Love the green room virtual background." I must point out, this is genuine. This is not green screen. This is all proper stuff here. We have gone to great expense to do up the studio. So I should actually ban him, I think. I mean, how dare he? Anyway, no, but I love Richard Woodstock. I wouldn't do that. We got another super chat, actually. Yogesh Patel wants to talk about auctions. I hear auctions are hot at the moment. Do you think prices achieved at the moment are similar to that you'd get through a normal estate agent for some types of property? And that's true. So some properties are going silly. I mean, what's your view right now on that?
Yeah, the auctions are hot. But to counter that point, I will say that there are auctioneers there are estate agents that have auctions as an arm of their business. And at the moment, they're not putting that much stock into the auctions because it's not getting to the auction. They're selling private treaty too quickly. So I would preface that by saying the market is really very hot, and the auctions are just keeping up with that at the moment. I think depending on asset class or opportunity that's being presented, there are some things that are absolutely flying at the moment. But there's been some absolutely ridiculous prices achieved. There was a property we were looking at a couple of weeks ago, where it was guided at 700,000. It sold for 1.7 something, just ridiculous, £1 million above guide. But it all depends what you're going to do with it. That's how you ascertain its value.
Let me float by you a little theory of mine. Rishi Sunak has cut stamp duty and all of that, and that means that there's a lot of money wanting to come into property, and auctions are, if you, from a buyer's point of view, can be a bit of a lazy way of buying a property. I mean, you just, on the day you bid, and 28 days you've got the thing. So
wash your mouth out with soap,
more lazy
Ranjan.
people than say the direct to vendor approach, which needs a bit more effort. So do you think it's attracting too much lazy money, and that's why prices are hot?
You should wash your mouth out with soap. I think the assertion that lazy people attend the auctions to buy is an absurdity. You have to be clinically, medically, psychologically insane to turn up to an auction and overpay just because you think it's easier. The risks involved with an auction sale and purchase are exponentially higher than at a private treaty sale, but
yes,
the results are exponentially better. At the fall of the hammer, you're a guaranteed purchaser. You've got a guaranteed sale. From both sides, that's phenomenal. But the time that you have to do your due diligence, the information that's available, those are the things that create the risk. So if anyone is watching this and they're approaching auctions in a lackadaisical,
403 watching it right 403. Now. Carry on.
Perfect. But if you are approaching it in a lackadaisical viewpoint, or just thinking it's lazy, you can just sit there and push a button and it's bought. Do not, under any circumstances, ever do that. What you need to be is you need to be informed. Unfortunately, what you're finding now is that there are either half-cocked or half-educated property investors entering into the market after maybe 6 months to a year worth of training. And what you're finding is
the hammer.
The Homes Under the Hammer crew, absolutely. Homes Under the Hammer have done a brilliant job in highlighting auctions as a suitable location to source properties, to source yourself some opportunities, in a ready-made catalogue. But what it doesn't do is it doesn't talk to you about how you actually do the numbers. If anyone's ever watched Homes Under the Hammer, when they talk about their profit, most people, it'll make, if you're a proper property person, you throw up at the thought of just presenting your numbers like that. But there's a lot of what I've been classing either ignorant or very low risk money out there. So yes, there's a lot. My money that I put into a deal is high risk because I don't have that much money. But so it has a degree of risk, of capital. It's appreciated by me. But if there's people out there with a lot of money and they're thinking, right, it doesn't matter what I pay for it now, I'm just going to bank it away. It's going to be 10 years away from now before I even think about looking at this again. That's very low risk, huge appetite money. And there's a lot of that in there. And it may be some ignorant money. It may just be that it's low risk money that's entering into the market. And why not? Why wouldn't it? Yes, but the problem is we're very much in a bubble. We came out of January, we hit the Brucey bonus of the Boris bounce back, whatever that was, or the bubble that he created, and we're in a similar bubble now. And how long can that sustain itself? I would postulate not that long, but we'll see. If you're low risk money and you're looking to portfolio, then you're in the market and you're in the market to buy. Now's as good a time as any. You only really lose money at the point of sale, and that really highlights whether you bought badly or not.
That's what I actually meant by lazy money. The people who are buying for cash and looking just for a better home than nothing in the bank and worried about the inflationary future effects of quantitative easing.
And why not do it now whilst there's still lending in the market?
Yes.
And who knows if more bad news comes out, maybe around unemployment and other such subjects. It may scare off the funders as it did in 2008 and as it did when COVID kicked off. Some major auction finance companies stepped out of the market sharp, really, really sharp.
So we'll come on to discuss some more of those topics in a mo, but let me just bring Piotr into the discussion. Piotr, now, is that a green screen behind you, or are you really by this lovely tree?
It's real. I was jealous of your background, and I thought I should have the same.
Well, brilliant. Just thanks for joining us from sunny Marbella, and thanks for standing in for Claire Norwood, who can't make it tonight. So
Anytime.
you are also kind of play around the auctions. I know you work closely with Jay and all of that, but if you can just talk a little bit about your background, and I know, and in particular, what I want to get from you is your mood that you are gauging from the auction rooms, because you've helped a lot of people sell at auction. But anyway, just tell people who don't know you the kind of things you do in
Yeah.
property. Share with us the mood from the auction room.
Yeah, sure. So I was speaking at Baker Street. I think that was October or November last year.
Oh yeah,
So
we'll
I'm
put
sure
the
a lot of people
link
have
later. Yeah.
seen one of my talk. But for those who don't know me, I trade properties in auctions. I buy and sell in auctions. I do it for myself with joint venture partners like Jay, like many other people, and also I do it with I sell properties for clients, and I've sold about 15 properties this year, about 12 or 13 during the lockdown. So it's been a very hot market in auctions, and there were a couple of months where things looked a bit scary, especially when lenders pulled out of the market. And because, as we all know, lending is extremely important to ability for people, like for people's ability to purchase property. And for a little bit of time, that was an issue. So, but now things are hotter than ever. Like the Boris bounce is just bounced double of what it was in February. Everything is basically selling, and I would definitely rather be a seller than a buyer in the auction right now. But in order to be a seller, you need to attract people, and in order to attract people, you need to put things with a low reserve price, because otherwise you'll be competing against a lot of other properties, and probably your property won't sell if you try to push reserve too high. So the final prices of properties in auctions are fairly high, but only if sellers are brave enough to put low reserve prices on their properties. So there is appetite to buy. Uh, Auction results are uh, phenomenal. And I am selling 5 properties for clients tomorrow, so hopefully that won't change overnight. And as I say, I'd rather be a seller in the auction than a buyer right now.
Okay. What do you think there's most demand for out there? What's easy to shift and what's not?
Definitely sort of mixed use commercial properties with income generating good leases. That's definitely selling fairly well, as long as the rent is payable and the tenants are paying still quarterly, and all those things are in place. Convenience stores are phenomenally well placed, because everyone knows that people will always need convenience stores. They will never go out of business because people need to buy food. So those things are kind of a fairly safe investment. And end user properties still sell very well. People move homes, they buy property, and anything with development potential, and actually any type of low price properties, they seem to be going like crazy.
Mhm.
It's all about catching people's attention, and there are buyers for every type of property out there at the moment. There's very few properties that people wouldn't buy, but they need to be attracted to it, and they need to come to the auction or like register to bid online and basically bid for this. So
Now, this heating up is, I mean, there was just a time, not that long ago, when actually the sales rate on auctions, during the start of this COVID-19 lockdown, the sales rates had started to plummet. And all of a sudden, it's picked up again. Do you know what I mean? A lot of properties were being withdrawn, a lot of properties weren't being
yeah,
sold, and all the rest of it. Then it turned. What was the thing that made it turn all of a sudden?
yes. So I actually this was all like this COVID thing was a massive surprise to everyone. No one expected lockdown to happen. So basically, during the first phases of lockdown, the auctioneers almost like I would compare it to like trying to redesign the plane while you're mid-flight. That that's what auctioneers had to do with the processes in the auctions. They were all planning for an in-room auctions, and suddenly they had to change into in-room auctions. They had to do remote viewings.
Yes.
They had to do all sorts of other things. And also buyers would have to register before the auction instead of just turning up on the day. It's a massive logistical process that had to take place. And a lot of sellers weren't comfortable, weren't confident that this process is going to work. So they would rather withdraw the property than let it go into this uncertain territory. And that's what really happened. Plus, the buyers had their doubts, because if they couldn't view the properties, they didn't want to risk their 200, 300, 500k on that property. So that's what caused the initial kind of drop in the sale prices. But now, as we kind of discovered the power of all those virtual viewings, and the Matterport things where you can measure the property
Yes.
even on the computer and stuff. The fact that people are comfortable with the online bidding process, it's now exactly the same as buying shoes on eBay, basically. All this allows for people to be more confident. Plus, all the things now, like there's more money available, there's money printed by the government, by the central banks, and the money is cheap. There's stamp duty cuts, there is PD rights, and like what's not to like.
Well, before we move on, Yogesh Patel, another super chat. I'm sure you super chatted before, but well done. He's got a question for you, Piotr. If you are not desperate or in a rush for money, does it ever make sense to sell a normal residential flat or house in an auction if it has no problems?
Probably not. Probably go for an agent. If you're happy to wait 3 to 6 months, go for an agent. I advise a lot of people come to me want to sell for an auction. I tell them, sorry guys, there's a bit of noise. I tell them go and try an agent before if you don't like the reserve price that I'm suggesting. Because the reserve price, I promise you won't like the reserve price I'm suggesting to you. Because that's going to be about 25% below what the agent would put the property on the market for. And that's going to be a real 25%, not the kind of Foxton's valuation. So you're not going to like it. But then there's a process for selling this property. The price is really secondary when it comes to auctions. The major aspect of major priority is the speed and confidence of having the sale agreed
Yes.
within 3 to 4 weeks. Then the price, it really then is dependent on how we run the process and how we make sure property is positioned and stuff like that. But you leave determining the final price to the bidders, not
Yes.
to
Yes.
your own likes. And you just set the reserve, and then the price is set by the bidders. You set the terms, the bidders set the price. That's how it works in auctions.
I think also if you've got an A1 condition property, there is a case for just sticking in an avocado bathroom suite, artexing the ceilings, having a party in it, and then trying to sell it as a slightly distressed, because it will attract a lot of fixer-uppers, won't it?
100%.
Probably at
Yeah,
the best price.
I'm sure all the people on this chat can come to this party and help with making the property auction ready.
Make it auction ready. Is that a service you're going to offer soon? Okay, another super chatter, Deepak Raja wants to know, UK residential auction sales as a very general rule. Okay, UK, I'm just trying to word this into a question. UK residential auction sales, as a general rule, what percentage extra on guide price would you succeed? Okay, I think the question is, what's the relationship between sales price and guide price?
There isn't one.
Yeah, there isn't one. Like every property is different, and every seller's kind of expectation of their minimum price is different. So there is a guide price, which is the kind of price that you see on the portals. Then there is a reserve price, which has to be 10% within 10% of the guide price. So that's probably like just 5 or 10% above. And then there's a final price, which is determined by the bidders in the auction, and that could be probably 20%, 30% above the guide price. But there are certain properties where you see uh, them selling for 3 times the guide price or even 5 times the guide price. It's um, it's really about the priorities of the seller. If the seller is not bothered with the price, they just want the headache of the head,
Yeah.
then the guide price will be super low, and the bidders will decide. But the lower the guide price, usually the higher the final price. So it really that relationship isn't fixed. It's very fluid, and it depends on where you set the guide price. If you set the guide price at £1, you're likely to sell the property for £1,000 more, 1,000 times more than the guide price, because it
Yes.
will attract so many people, and also there's that kind of relationship. But I would say normally 20-30% above guide is not unusual.
Okay. Okay. So moving on, what I'm going to do now is ask you guys. We're going to have a little bit of a discussion, and I'm going to kind of open it up to all three of you to give me a couple of minutes on your thoughts. But the market's a bit hot right now. We've had a lot of money pumped directly into the economy. Some people say next year is where the problems are going to start once people come off furlough and bounce back loans have to be paid back. And what are your views when people ask, should you invest in the market right now, or should you wait until next year because there'll be better bargains? Who wants to start us off with their views on that question? The invest now or wait until next year kind of debate.
I can start.
Oh, he beat me to it.
I would say it all depends on the type of property you're looking to buy. There are certain properties which, even if the prices go down 30-40%, which is unlikely, but even if they do, it doesn't matter, because if you can add 2-3 times the value, then even the drop in prices will be compensated, more than compensated. So for example, we bought the property, actually I was talking about this the on your Baker Street, and that was mid deal. Like we just purchased it, and I was talking about what we're planning to do. We purchased for 212k, commercial workshops in Tooting. We only got the planning permission, permitted development for 4 houses, and we sold it in June. Sorry, someone tried calling me. So I'm just saying we sold it in the auction for 3 times the price without doing anything to it apart from getting paperwork. So even if the prices went down 30%, 40%, we'd still have sold this property for 400k, not having done anything to it really.
So from your perspective, you're saying the way to shield yourself from downside is to make sure that you only buy stuff with significant immediate upside.
Correct, yes.
Hanif, what's your view? Invest now or wait till next year because it'll be better bargains?
It's a difficult one, okay, because it depends on your time horizon. If you're thinking I need to sell something next year, then I would be, I wouldn't probably invest now. But if you're looking to hold properties for the long term, then it's almost irrelevant what the price is in between. And the way we always look at things is we're looking to add stuff to our portfolio for the next 20, 30, 40 years. We don't really care about what happens in between. What's more important to us is the income that the property generates. So long as the income that we're generating every month produces a cash flow, so the mortgage is £1,000 and we're getting £2,000 a month in income, so we're making £1,000. We don't mind what happens to the property price in the background. It's almost irrelevant, because we believe that property long term goes up in value. So if next year it goes down, or the year after it goes down, but then it will go up in 3-4 years. So long as you have that belief, then that's and your time horizon is length, then there's no problem. For people who have a shorter time horizon, then you have to be more wary, obviously, because if you're going to sell stuff next year, you need to be sure that you can either, like Piotr said, add value now, so buy something, add a load of value, so even if the price goes down, you're still better off, or you need to get stuff below market value right now, so that you're cushioned from any ups or down in the market. from my experience, I would always say buy a property when you know, if a good property comes along and and the numbers work, the income is working, buy now, because I've seen lots of people waiting to get into the property game, and they wait and they wait.
Yeah,
and they go, well, I'm waiting again. I'm still waiting. And you see them years later, they're still waiting. I remember when I first started, there's a group of 5 mates of ours, and we were going to buy some properties together. And we said, oh, we don't know, the market might be a bit hot at the moment, so let's wait. And we waited 6 months. And in the end, I just went, look, I'm going to do it on my own. And a few of them are still waiting for that. And this is 25 years later, for the right time to get in, when the prices will be right. So my advice is look for the right types of properties and invest straight away. You know,
it works, cash flows.
Yeah,
exactly. It makes sense. Jay, what's your view on the buy now or invest later?
Yeah, sadly, I think I'm just going to repeat what everyone else has said, but in a different way. I think if the deal stacks, do the deal, because when you start letting deals fall by the wayside or becoming too picky, you're never going to get back into doing deals again. It's never going to be the right time. There is never a good time to buy. There's never a good time to do anything. But if you allow that procrastination to get into your mindset, or you move into analysis paralysis, you're never going to do anything. I mean, I remember you telling me a story quite a few years ago now that you started buying in 2007 and 2008 because no one else was. You put yourself in that position, and you know you're a successful property entrepreneur now. So it worked for you. It could work for others, but you took the time to enter into a marketplace that other people are exiting from, and sometimes you need to be going against that grain.
Absolutely.
Unfortunately, in this market,
is the best time.
yeah, unfortunately, in this market, the grain is people paying too much for property. But like Hanif said, if you can buy one, I think I was watching some of the comments. Someone's picked something up at auction today or yesterday, and they feel they've got a good price. That's all that matters. And, you know, property is worth what it's worth to you. No, a 3-bedroom semi-detached house worth to me isn't what it's worth to somebody else. Someone else could turn that house into an HMO and multiply that income. All of a sudden, that property's worth twice what I would ever pay for it. You know, it's that kind of thing that people have to start getting used to. You know, the disparity between the guide, the reserve, and the end sale price is meaningless, and the deal has to stack for you, and that's in any market and every market.
Absolutely. And now I wanted to get your views now on really sort of your predictions. I mean, I don't know who can make predictions in this current market. I mean, we're so confused by government policy, I think. I'm not really sure whether they know what they're doing. And I think the confusion in government policy is characterized with what's happening with food, quite frankly. We have a portly prime minister talking about a battle on obesity, while the guy living next door to him, Rishi Sunak, is probably one of the slimmest chancellors we've ever had, occupying number 11, who is giving £10 to all of us to go out and get bargain buckets and junk food in the month of August. So we have complete confusion in government policy in every department, and that's just a simple example of the contradiction that's going on right now. So against that backdrop, really, of sort of confusion, it's very hard to predict what's ahead for the property market. But just very quickly, I mean, you know, just a quick fire, really. I'll start with Jay. What are your predictions for the next couple of years?
It's really hard to predict, because if we look at the last 2 recessions or points in time when you've had these kind of pinches, the government has not reacted this way. The government acted in a contra way. It kind of protected the big businesses, the banks, everything else, you know, at the very, very top of that pyramid. This time around, it's protecting everyone at the bottom of the pyramid. So it's kind of turned itself upside down. It's going to be really very interesting to see how long they can keep these incentives, such as the furlough scheme, such as the bounce back loans, such as reducing taxes for hospitality, such as, you know, introducing these you know, red ribbon kind of paper cutting exercises, such as the new PD rights and new use classes and things like that. It's going to be really very interesting. A lot of it feels to me like it's just supposed to bring in impetus into the market rather than being quantitative easing. But with all of these things, the money has to come from somewhere. And where it comes from somewhere, it has to be replenished. So how long they can keep printing this money or providing these, keeping people in jobs through this furlough scheme, it's going to be really very interesting to see how they're going to do that. Because I don't think they're going to increase corporation tax. They're not going to increase, the capital. Well, maybe capital gains is a good route for them to kind of, get that redistribution back. But they tax you for living and they tax you for dying in this country. So they've got to find somewhere else to pull this back into. But it would be really very interesting to see how long this is going to last. Even the stamp duty holiday is going to be really very interesting to see how long that can continue for, because we're an island. All we have is land. And if you're making it free for people to transact, or close to free, or cheaper for people to transact, it's not going to refill your coffers. And with national kind of projects such as the HS2 and a couple of other projects which are hemorrhaging rather than producing or growing, it's going to be really very difficult. And not to mention, we're still talking about COVID. We haven't mentioned Brexit yet.
Yeah.
And there's been very little done at the negotiating table.
I don't know what the point is of HS2. All it means is I can take a train and see Hanif and get there 10 minutes sooner. I mean, that's pretty much it.
And why not? Why not,
and
Ranjan?
Why
say,
not? 10 minutes.
If you're nice, and it's better to be early than to be late, and manners maketh the man. But the idea, I think, was to create interconnected travel within that kind of northern to Midland power block that you have there. And I think the idea was to kind of, from the rural areas, make the townships bigger and increase kind of GDP for those areas, which is a brilliant idea. It's not brilliant.
I do agree. The northern location should be better linked. Some kind of transport between Edgware, Stanmore, and Harrow would be much appreciated. I think it's very difficult to get around the northern there.
If you're not a Londoner, he's really taking the mickey there. That's brilliant. I used to say if it's beyond Watford, then it's north, which is a poor statement.
If I can just come to you, Hanif, and just ask you, what do you think are the opportunities for investors over the next few years? Where do you think they should be focusing their firepower?
Okay, so there's lots of opportunities in different niches within the market for sure. And the way I always look at things is I look for change, because change leads to opportunities. Because the established players don't know how to react, there's an opportunity. So, for example, look at the big trends. There are big trends that are going on. So one of the big trends is the internet. So what does that mean? Well, that means that retail is going to go down, which is opportunities for redeveloping retail shops, etc., etc. Online is going to go up, which means there's going to be more demand for warehouses, fulfillment centers, etc. More and more people are creating their own small businesses where they want, instead of a small office, they want a small warehouse with a little office in there. So can you design warehouses that are 2,000 square foot with an office? And that's the kind of thing people want to rent out. So, for example, in Birmingham, it's really difficult to find something of that sort of size of a warehouse. So maybe getting big warehouses, splitting them up. There's lots of opportunities. Another opportunity is changes within how we look after and care for people. So the whole supported living business. So we're fully invested in that. We have a business. We're buying lots of properties to invest in it, because the income that can be generated from the rooms there is far greater than HMOs or something equivalent. So I always look for the changes, and all of those changes are happening. So any of those things are opportunities for sure. Timing that opportunity is the big question, and what is the question that I find lots of people always ask. But I always look at someone like Warren Buffett, and he said, I have no idea when the bottom of the market is going to be. And he doesn't care. He looks at, value investing. And that's basically what we do. Value investing, which is, does the deal stack, as Jay said earlier? And if the deal stacks, it's irrelevant. That's the most important thing. But look for those opportunities, because you will have opportunities now because of new PD rights. Then all of those things mean that certain properties have different values that they did a few weeks ago. And what I love about property more than anything else is I can create value and money through my imagination. There's not many things, I can look at a house and the next guy can look at that house and he can say, that's a £200,000 house. And I can go, oh, it could have 4 stories. It could be, I can convert the loft. I can do this, I could do that. And actually it's worth $500,000. And I've created 300 grand's worth of value through my imagination, which he hasn't. So that's what I love about property, that ability to imagine more money and to imagine greater value.
Yes, and particularly with commercial property, because the options aren't as obvious as they are with a 3-bedroom semi. I got another super chat coming in from Rakesh, and what he's asking is, given all the new flats going up all over the UK, aren't we in danger of oversupply of residential properties? There are a lot of new builds going up, and also with the permitted development rights to convert former commercial buildings into residential usage. I guess the speculation there is, could there be an oversupply of things like 1- and 2-bedroom flats?
It would be really very difficult for there to be an oversupply, considering we're in a housing shortage and are not building enough houses to meet with current population levels. But I do get the point that's being made. Maybe should there be more houses or more housing estates apart from flats? But I think the idea of there being more flats that they're being created is because the government really doesn't like HMOs. That's why they've got all these Article 4s and pushing things through to planning now. They want people in regulation-sized, minimum living standard kind of accommodation. Doesn't say that some HMOs are absolutely phenomenal in their fit and finish and their sizing, but you try making an argument to a policy producer in government and you'll be left wanting, certainly. But with the housing shortage, actually the conversion stuff is cheaper to do. As long as you can build anything more than a rabbit hutch, which is obviously something that the newspapers have taken a hold of and run into ridiculous town with. But the thing is, flats, considering you can stack them, it's a quicker, more viable way to fill the housing need over houses. And I did say we're an island. We have a finite level of space, and that's without digging into greenbelt and areas of outstanding natural beauty and all that stuff.
Yes,
I want to bring something to also to the conversation on this subject, because it's a very general question, and I think the answer cannot be general, because we might have a lot of I don't know, there might be a lot of flats being built in Leeds, for example, but are there enough flats being built on the outskirts of London where it's convenient for people to travel, and it's affordable, and it's not 1 million plus or £1,000 per square foot type place? So it really depends on what kind of flats are being built, and are those flats is the demand for what is being built? Because I think there is demand for a lot of flats, but it's whether those flats are the ones that are being built, and in the locations that are being built, and all that kind of needs to be taken into consideration. And I think if we have the right locations and the right prices, then there's going to be no problems. But if you're building now luxury properties, like luxury flats in central London, I would not want to be in your shoes.
Okay, and a super chat has come in from Yogesh, is saying that he very much likes our YouTube clips where we have analysed auction lots, and that's a little series that Jay and Piotr and myself are involved in. For those of you who don't know what I'm talking about, I'll put a couple of links to some stuff that we've done before. I'm sure we're going to do that again, aren't we? We haven't done one for a couple of months, but
yeah, we need to get busy and do that again. Yeah,
we'll certainly schedule that in, since we know that there are several of you who enjoy that little thing. We're nearly coming up to the end. What I wanted to kind of ask all of you guys really is to give us a sneak peek, if you like, of the kind of investments you're looking to do over the next couple of years. This is going to be an interesting time, but where are you going to focus your firepower? What sort of stuff you're going to look for? I'll just kick this off. I mean, I'm looking at commercial buildings, because I think that commercial buildings aren't exactly obvious. A lot of people know what to do with a 3-bedroom semi or terraced house or whatever, but you look at a commercial building, it's not exactly obvious what you can do to it. There can be a number of different plans of what you can do to it. And particularly with the opening up of PD, I think that it's going to be first mover advantage, and it's going to take some time before people fully understand what you can do with permitted development, and also how different permitted developments can be combined on one single site to maximize its uplift. So I think there's some exciting things to be had there, and that's where I'm going to be looking at focusing a lot of my firepower over the next few years. But I just wanted to throw it over to you guys to share your views. Where are you going to be putting your firepower over the next few years? Who wants to kick us off?
I will be looking for multi-unit, multi-use, multi-exited and faceted properties where I'm not reliant on its existing purpose and use, whether that's PD or planning or breakup or whatever it is. I'll be looking at buying things where I can either the sum of the parts of the building execute more than the whole, or where I can chop and change to add value and fit the dynamics of the area or an increase in value that I'm looking to achieve.
Okay, Hanif, where's your firepower going?
So commercial for sure, because I think there are more opportunities within that sector at the moment. And what Jay said, but in a slightly different way, we look at it in a way of wherever we can add value in some way it has the potential to add value. So we don't need to add value straight away. So for example, it might be a commercial warehouse that's currently let out. We've got no problem with it being let out in that way, but we want to be able to maybe knock it down and do something in 5 years, 6 years time. So it should have longer term potential value, but in the short term, we don't mind.
Okay, Piotr, same question to you.
Yes,
Spanish
and well,
property
considering I'm working with Jay, we're going to be looking at the same types of opportunities. But being a bit more specific, I'd like to be focusing on the properties that perhaps got some angles that other people miss, or perhaps got some problems that we know how to solve, but other people don't. And those kind of problems prevent people from bidding on those properties at the prices that they would normally go for, and we can pick them up at much lower values. So definitely problem properties within what Jay said.
Properties.
That's the beauty of working with Piotr. You get that extra bit of clarity that I just won't give up. So there you go. That's how the relationship works well.
Problem properties, absolutely. Rakesh has super chatted, and this is a question for commercial people, really. Given retail sectors in fast decline, wouldn't it be difficult to find a commercial retail tenant? By the way, fantastic show. Thank you. Thanks very much for your kind words. Yes, retail tenants are not difficult to find, but probably near impossible to find in most areas. But I think the way I'm looking at it is convert as much of the space as possible into residential. What are anyone else wants to share any views on?
Yeah, there are a number of retailers that are actively looking for property and want it. So for example, Screwfix, Crown, these kind of guys are actively looking to rent properties. So it's not about commercial properties as a whole, and there's no one who wants to rent them. It's the right kind of properties in the right kind of locations. So from our point of view, is trying to understand the right kind of property that people are actually looking for.
Yes. I mean, anyone selling products off shelves is pretty much doomed in a high street situation. It's services and these retail parks like Screwfix, Tool Station, they're expanding. The pizza people are still expanding, but people like John Lewis, of course, are not.
And I think there's going to be a lot of opportunity around the new flexible use class, the Class E, because now you can convert retail properties into all sorts of cafe, nurseries, all sorts of things. Can you imagine shops being a little bit of a nursery and a cafe, and at the back there's like a luxury type of stuff that you can buy, and there's going to be so many things that people are going to come up with that aren't possible right now with the current class use. So from 1st of September, the people's creativity is going to be unleashed, I think.
Yes. We're going to be doing some videos later this week on some of the PD changes, and particularly the changes to use classes. And I'm not sure whether people realize what changes these use classes are actually going to mean for everyday life. I mean, take, for example, Costa and Starbucks. There's a reason why all they can do is heat up a toasted sandwich for you, is because most of them operate under A1 stores, A1 usage class stores. And that means they can't cook anything on site. Now, of course, they would have the freedom, if they wanted to add something to the menu that they need to cook, they can do so. Greg's, for example, they operate under A1 retail premises. And that means they can't bake anything. So what they do is they half bake their sausage rolls in a factory somewhere and bring them and warm them up on the premises. And that's simply because so that they can operate under A1 usage class. Now they're free to do whatever they want. We used to have this thing where certain garden centers only had the usage class to sell plants and had difficulty opening full cafes. Now businesses are free to use their commercial properties however they wish. And this is a monumental change, and we haven't even got onto the repurposing aspects yet.
No, and I think that's interesting. I think when it comes to commercial property, if you're looking at high street, there is an evolution that's going on. It's not the first time the high street's evolved. It certainly won't be the last time the high street will evolve. So I think you need to be looking at the type of tenant that you're looking to put in there, the type of agreement you want to put them on, the type of flexibility that you're going to create in terms of the space that you're providing. And as Ranjan says, a lot of the commercial space that's available on the high street is wasted space. Once you go past, zone C or zone 3, depending on which way you play, it's wasted space. So why not repurpose it? I think you need to be really very smart coming up. I think there are certain asset classes on the high street which aren't going to go away. You're still going to have the charity shops. You're still going to have the barbers and the nail bars and things like that. I don't want Hanif's wife getting concerned. There's going to be hair and beauty on the high street, guys. It's going to stay. But as Ranjan said, if you're a stockist, anything apart from maybe your own corner shop or an off license, you're probably going to struggle. And online for any kind of business like that is going to be making more money. I think having a high street presence to a certain degree is just a bit of ego for the most part, or maybe they think it legitimized themselves as business. Some online companies went to the high street and then left, or some started in the high street and realized actually we don't need to be here. We can occupy a far larger digital space online, and I think you're seeing the robustness of that happening. People haven't noticed this. It's been going on since HMV, and that will take you back a couple of years.
Yes, very, very true. Okay, guys, I think that brings us to an end for this month's live stream show. Listen, thanks very much. It's been a very entertaining chat. We're just going to end with where I'm just going to ask these guys a question I haven't really prepared them for. I just want to go around them and ask you to share one tip for finding bargain properties in the current climate. So I'll just waffle on for a little bit while I give you a chance to think of one tip that you can share with our viewers for finding bargain properties in this market. Now, when we put the replay out on this video, I'll put some links to some of the videos that we've referenced here. We won't be doing a live stream in August, but we will be back in September for our usual round. Do leave comments and anything you found interesting or takeaway points in the comments on this video. So now that I've waffled on a little bit and given the guys time to think, let me just go over to Piotr. I think I'm looking at him first. What's your tip for the viewers?
So 100% follow up with people you've been speaking with for the last, whatever, 6 months, 9 months. They're probably, if they haven't sold by now, there will be deals to be done with those people.
Absolutely. Follow up. Hanif, what's your top tip?
It's really about the opportunities that are out there in terms of commercial properties. You know, if a commercial property becomes empty right now, the landlords are worried. Mm-hmm. They don't want to, you know. So anytime if you see something closed down, you see a shop empty, you see any sort of place where the tenants have stopped, those landlords will be very keen to do some kind of deal. And it doesn't necessarily mean a pure purchase type deal. They will be very open to a lease option type deal over their property, yes, which gives you a very great way of getting into some of these deals without very little, you know, with little or no money, because they just want somebody in there. You know, I can remember that happened in the last recession. I'm pretty sure it's going to happen again. So if you can choose retail opportunities where you can repurpose that building in some way so that you know that you've got a tenant for it, or you can potentially have a tenant, you could probably do a lease option with them where you're paying them rent now with a purchase price in the future. And I would, you know, we are actively looking for those to lock people down on a 5-year, 6-year, 10-year time horizon with a price today.
So slow market, creative deal structures are fantastic. More videos on that coming shortly on this channel. I'll put some links to a video that we did recently with Simon Zushi on lease options in this market. That's quite entertaining. Jay, what's your top tip?
I have a top tip for experienced and a top tip for the inexperienced, if that's okay.
Yeah, of course.
Top tip for the experienced is follow your gut, follow your intuition, follow your instincts, because those are going to be the things that will protect you and drive you through and make you certain of what it is that you're doing in a turbulent market. For the inexperienced, understand the fundamentals, apply the fundamentals, and do not deviate from the fundamentals.
Brilliant.
That's it.
Put. I know, but normally when I ask you a question, I expect a lot more, but very, very succinct. Absolutely fantastic.
Even I'm impressed. Wow.
Listen, thank you very much for joining us this evening. Thank you very much for joining us wherever you guys are. Make sure you've subscribed and the bell icon, because these are going to be very interesting times ahead, and we'll be putting out new content each and every week to help you guys navigate through it and be successful in property. The live stream is back in September with more expert guests. You've been absolutely great for joining us. See you guys next time.
Thank you.